Hello traders, Gary Wagner here. It is 10:55 in Honolulu, 4:55 in New York on Tuesday, 19th day of July 2022, and this is the Daily Report for gold and silver. Even with extreme dollar weakness, gold has had a difficult time moving to higher ground. Currently, we have the August contract of gold futures down 70 cents or 0.04%, and an ounce is fixed at $1,709.50. When I talk about dollar weakness, you can see that it is fairly significant. The dollar has been trading lower for the last 3 trading days. It traded to a high above 109 last Thursday and is currently fixed at 106.56, down 0.63%. Silver is also trading lower on the day, down 0.85%, with the September futures contract currently fixed at $18.68.5. The main tool of a market technician to forecast where prices in any given commodity could go to is to look at historical data as a reference point, to look for tops or bottoms to identify support or resistance areas. In the case of the dollar and its current value, that is extremely difficult to do. The reason being, on Thursday, we hit a high just above 109, and the dollar has not had that high of a value since July of 2002, 20 years ago. So what we have done is to create a basic Fibonacci extension in which we look at a rally and then take the move between the low and the high, and then look for when that rally concluded and the correction concluded, and then do an extension from that low. That is exactly what we've done here. We have taken the distance or the gain seen from 80 to 103 that occurred back in 2014 up to 2017, and at the conclusion of the correction, which happened in 2018, did an extension of that. And we can see that a 1-to-1 extension would take us to 112.95. And what we had done is ascertained a potential level of resistance at the 78% Fibonacci extension level. The 61.8% extension level lines up precisely with this double top that we identified months ago. Doing that, we see that it greatly surpassed this particular price point. However, it has come back into alignment and is now trading below that. That tells us that the level of 107.5 is a critical or an important area that looks like it could be a rough area of resistance, because it certainly took that price point out but is now back below that. And what we're looking to see is whether or not dollar strength will continue to extend this rally, or whether or not we will see the dollar begin to soften. And according to most recent data, we might have seen at least a temporary peak in dollar strength. Obviously, dollar strength or weakness is critical when we look at a potential forecast as to where gold prices could move to. Obviously, we have seen gold trade under tremendous pressure beginning in March, the point at which the Federal Reserve implemented their first interest rate hike, up to current pricing. It dipped just below $1,700 on Thursday and Friday of last week, but at least for now has recovered and is trading above $1,700 both yesterday as well as today. The question is, will gold find support at around $1,700 and begin to move higher, or move to what we're calculating as a major technical level of support that comes in at around 1680. It's based on a multitude of bottoms The most current one being the flash crash that occurred in August of last year. That being said, we are trying to go long gold, basis the August contract, just below 1,700. We have an order in to buy at 1681 or better with a stop $14 below that. And we are now debating whether or not we want to continue to keep that open, as we have not seen gold break strongly to the downside enough to fill that order. That will be something we'll talk about over the next 2 days. But as for now, we will maintain our open order to buy August gold at 1681 or better and maintain our stop where we have recommended. All of that information is on the members page. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.